Welcome back to Malaysia Money Matters. It's December 27th, 2024, and we've got a ton of company news today, plus some potential investment opportunities to think about.
Absolutely.
We'll also, of course, take a look at all the economic indicators, those all-important economic ripples that could make or break your portfolio.
Yeah, it's going to be a dynamic time.
Ready to dive in.
Let's go.
All right, first up, let's talk electricity. You might want to brace yourself, because that base tariff is going up.
Yeah.
14.2% to be exact. For Peninsular Malaysia, that means the new rate will be 45.62 sen per kilowatt hour. Ouch.
It's a big jump, no doubt about it. It's largely because of the global cost of gas and coal. And of course, those are major fuel sources for power generation.
Right.
The ICPT mechanism will probably come into play, and that lets TNB adjust for those fluctuating fuel costs. So keep an eye on your electricity bills.
Yeah, we'll see what happens in the coming months. On a brighter note, though, Tenaga Nasional Berhad, TNB, they're making a huge move towards renewable energy. They just secured a 500-megawatt solar farm project in Kedah under the LSS5. That's the largest solar project in Malaysia to date.
It's a major win for TNB, showing they are committed to renewables. But what's interesting is the competition. Particularly from Gentari, they're a rising force in the renewable energy scene, and they could challenge TNB in the long run.
Okay, so is this solar project part of the reason for the tariff hike? Are they trying to recoup their investment costs?
Yeah, it's definitely part of it. TNB is investing heavily in infrastructure to ensure reliable electricity supply and support that national energy transition. These costs are passed on to consumers to some extent.
Okay, speaking of energy transition, the Green Electricity Tariff Program is sticking around in 2025, but there's a twist.
Right. The premium for choosing green electricity, it's staying put, but they're rolling out these new, attractive long-term subscription packages with discounted rates as low as 8 sen per kilowatt hour.
That's pretty good. This could be a game changer for businesses, consumers looking to go green and save money.
Yeah.
It definitely makes going green more appealing. Now let's switch gears to the petrochemical industry. Kenanga Investment Bank is giving Petronas Chemicals an outperform rating. They believe the company's about to turn things around.
Kenanga is banking on a potential uptrend in polyolefin prices, and those are known to be cyclical.
Okay.
Their target price for Petronas Chemicals is RM 5.47. It's a bit of a contrarian view, considering the stock has taken a 32% hit this year.
So why is Kenanga so bullish on Petronas Chemicals? Aren't they facing some challenges right now?
Yes, thinning refining margins and foreign exchange losses have been weighing on the industry, but Kenanga sees these as temporary setbacks. They believe upcoming plant turnarounds could actually lead to higher average selling prices due to tighter supply. This, coupled with the anticipated polyolefin price rebound, makes them optimistic.
Okay, interesting. A potential rebound story there.
Okay. Next up, RHB Investment Bank is sounding a note of caution for the Malaysian auto sector, especially the non-national brands. What's going on there? Well, they're concerned about a few things. Intensifying competition, particularly from Chinese brands, could lead to price wars, squeezing profit margins, plus using backlog orders, and the possibility of petrol subsidy rationalization are adding to the uncertainty. RHB anticipates an 8% decline in total industry volume, or TIV, next year.
So not a great outlook overall. Are there any bright spots for investors in the auto sector?
RHB suggests taking a selective approach. They like Bernaz Auto for its valuation and dividend yield, and they see Sime Darby as well-positioned in the EV market, which is expected to grow despite the overall slowdown.
Okay, so proceed with caution, but there might be some opportunities for savvy investors. Now, before we move on, I'm curious, what's grabbing your attention from all this news so far?
What stands out to me is the contrast between the short-term challenges and the long-term trends. We're seeing immediate pressures, like rising electricity costs, intensifying competition in certain sectors. But at the same time, there's this underlying momentum towards sustainability, technological advancement, which could create exciting opportunities down the line. It's a fascinating dynamic.
I completely agree. It really highlights the importance of taking a balanced approach to investing.
Absolutely. Looking beyond the headlines and understanding the interplay of different factors is key to making informed decisions.
Host. All right, let's shift gears and zoom out a bit. What's happening on the international stage that could impact the Malaysian economy?
Well, there's some good news from the U.S. Holiday retail sales are looking strong, up 3.8% year-on-year, with a big boost coming from online shopping. This suggests a healthy consumer appetite, which could benefit Malaysian exporters.
Okay, that's encouraging. Any other global trends we should be paying attention to?
Alibaba is shaking things up in the e-commerce world with a $4 billion joint venture in South Korea. With eMart, this expansion could have ripple effects across Southeast Asia, including Malaysia, as competition heats up in the digital marketplace.
Speaking of competition, China's economic landscape is looking a little mixed. Their finance and property sectors are facing some headwinds, with workforce shrinkage for the first time.
Yeah, the property market downturn in China is a significant development.
Yeah.
But it's not all doom and gloom. The World Bank actually raised its GDP growth forecast for China for both 2024 and 2025. They cited policy easing and export strength as positive factors.
So a bit of a balancing act for China. Speaking of balancing acts, Japan's Nippon Steel is facing some hurdles in its $14.9 billion acquisition of U.S. steel. Political roadblocks and opposition from unions have delayed the deal.
This situation highlights the complexities of cross-border mergers and acquisitions. It'll be interesting to see how it plays out and if there are any lessons.
For Malaysian companies looking to expand internationally. Now let's focus on some U.S.-specific news. Continuing jobless claims have reached a 3-year high, suggesting a potential cooling of the U.S. job market.
This is something to watch closely. A slowdown in the U.S. economy could impact global demand, which would have implications for Malaysian exports.
Another trend to monitor, the sharp decline in U.S. oil exports to China.
This is a multifaceted issue. China is slowing growth, its shift toward electric vehicles, and its increased oil purchases from Russia and Iran are all contributing factors. These dynamics could influence global oil prices, which would in turn affect Malaysia's energy sector.
Turning our attention to the UK, there are predictions that it will outperform its European peers economically over the next 15 years.
This forecast is based on the UK's perceived resilience and adaptability in a changing global landscape. However, challenges remain, and it's by no means a guaranteed smooth ride.
Okay. Meanwhile, Thailand's central bank is projecting inflation to stay within its target range for the next few years.
This suggests that Thailand has a good handle on inflation, which is positive for Southeast Asia as a whole, including Malaysia. Stable regional economies create a more favorable investment climate.
Here's an interesting one. Uber's attempt to buy Foodpanda's business in Taiwan was blocked by regulators over concerns about reduced competition and potential price hikes.
This highlights the growing importance of antitrust regulations in the digital economy. As companies like Uber and Grab expand their reach, regulators are stepping in to protect consumer interests and ensure a level playing field.
And finally, Turkey's central bank has made a cautious move, cutting interest rates for the first time in almost 2 years, as inflation shows signs of easing.
This is a delicate balancing act for Turkey. They need to stimulate economic growth while keeping inflation under control. It's a reminder that even seemingly positive developments can carry risks and require careful monitoring.
So much is happening around the world that could impact us here in Malaysia. What's your key takeaway from all these global trends?
What strikes me is the interconnectedness of it all. Economic shifts, political decisions, and even consumer trends in one part of the world can ripple outward and affect Malaysia. It underscores the importance of staying informed and adaptable, constantly assessing risks and opportunities in this dynamic global landscape.
Absolutely. Now let's dive back into the Malaysian market and explore some company-specific news. That caught our eye. KPS Berhad is making waves with its SILIC initiative, which aims to boost STEM education among B40 students.
This initiative aligns with Malaysia's goal of becoming a high-tech nation. KPS is demonstrating corporate social responsibility, but also potentially nurturing a future workforce equipped for the jobs of tomorrow.
And they held a STEM carnival recently, where students showcased some really impressive prototypes. There was a system for lowering water pH levels in fish tanks, and even a durian husk-based cat litter. Pretty innovative.
It's inspiring to see these young minds at work tackling real-world problems with creative solutions. It bodes well for the future of innovation in Malaysia.
Now, for a look at the energy landscape. India is continuing to invest heavily in coal-fired power plants, despite its push for renewable energy.
This reflects the challenges of balancing economic development with environmental sustainability. India's growing population and energy demands make it difficult to transition away from coal completely, at least for now. It's a reminder that the path to a greener future isn't always straightforward.
Meanwhile, Ola Electric, India's top e-scooter maker, is going all in on expansion, opening a staggering 3,200 new stores. in a single day.
That's a bold move, signaling their confidence in the Indian electric vehicle market. It'll be interesting to see how this plays out, especially given some recent consumer complaints they've faced. Growth and expansion don't always go hand in hand with customer satisfaction.
And speaking of bold moves, China is planning to build the world's largest hydropower dam in Tibet.
This ambitious project aims to meet China's growing energy needs, while reducing its reliance on fossil fuels. However, there are concerns about the dam's potential environmental impact and the downstream effects on neighboring countries like India and Bangladesh. Mega projects like this often come with trade-offs.
Shifting focus to Taiwan. The presidential office recently conducted its first ever tabletop exercise, simulating a military escalation with China.
This highlights the heightened tensions in the region and Taiwan's efforts to prepare for potential conflict. The involvement of various government agencies and civil groups suggests a whole-of-society approach to national security. It's a stark reminder of the geopolitical risks that can impact the region, including Malaysia.
And speaking of tensions, China's anti-corruption campaign within its military is widening, with two high-ranking military lawmakers recently ousted from parliament.
This move suggests President Xi Jinping is consolidating his power and ensuring loyalty within the armed forces. It's a development worth watching for its potential implications for China's domestic and foreign policies, which could have ripple effects throughout the region.
In other news, the former mayor of Taipei has been charged with bribery and misuse of political donations.
This case highlights the importance of transparency and accountability in government. Corruption scandals can erode public trust and create instability, which is never good for business or investment.
And finally, there's a concerning report about an Azerbaijan Airlines plane that crashed in Kazakhstan, with some reports suggesting it may have been accidentally hit by Russian air defense systems.
This incident, if confirmed, would raise serious questions about air safety and could escalate geopolitical tensions in the region. Uncertainty and instability are never good for the markets.
Definitely a situation to monitor closely. Before we move on to our final thoughts, what are your initial reactions to this batch of news?
It's a mix of positive developments, challenges, and potential risks. The global economy is in flux, and we're seeing both opportunities and uncertainties emerge. What's clear is that staying informed and adaptable is more important than ever.
I couldn't agree more. It's a dynamic world out there, and investors need to be prepared to navigate the twists and turns. All right, we've covered a lot of ground today, from Malaysia's electricity tariff hike to TMB's massive solar farm, from Petronas Chemicals to the auto industry, even taking a look at those global trends that could impact us right here at home.
Yeah, it's been quite a journey. Through the world of finance and economics, we've explored opportunities, analyzed risks, uncovered some intriguing developments.
So for all our listeners out there, what's the one big takeaway from today's deep dive? What should they be thinking about as they navigate these complex markets?
The word that keeps coming to mind is transition. We're seeing it in so many areas. The shift towards renewable energy, the rise of electric vehicles, the evolving geopolitical landscape, even the way companies are adapting to changing consumer behaviors and technological advancements. It's a time of significant change, and that brings both challenges and exciting possibilities.
So how can our listeners prepare for this era of transition and make the most of the opportunities it presents?
I think the key is to stay informed, be adaptable, and don't be afraid to challenge conventional thinking. Remember Kanenga's bullish outlook on Petronas Chemicals. That's a perfect example of looking beyond short-term headwinds and recognizing the potential for a turnaround.
That's such a valuable point. Sometimes the greatest opportunities are found where others see only risk. Any final thoughts you'd like to leave our listeners with?
Don't be overwhelmed by the constant flow of information. Focus on understanding the key trends. Assess the potential impact on your investments and make decisions based on a long-term perspective. And remember, knowledge is power, especially in the world of finance.
Couldn't agree more. Thanks for joining us on this deep dive into the world of Malaysian finance.
It's been a pleasure sharing these insights with you.
And for all our listeners out there, don't miss out on future deep dives into the world of Malaysian finance. Subscribe to the Malaysia Money Matters podcast for your regular dose of market analysis, investment opportunities, and a bit of fun along the way.
Until next time, keep those investment wheels turning.
See you next time. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at mmoneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.